Hi, my name is Roger Schlitter. This video is actually about cash management. And, a lot of your small companies, I know when I was in banking, a lot of the small companies just really can't avail themselves to cash management. Now, things are evolving all the time and getting easier for a lot of companies to use these programs. But anyway, cash management can be, you never know, you're going to grow and then eventually maybe you can avail yourself. Usually a bank can tell you whether you're big enough or not. But anyway, most small companies, like I said, do not need cash management services. Most cash management services are really reserved for the large companies. But like I said, your bank can tell you, if it is determined, that you can use some of these programs. That being said, the purpose of the video will be to really go over cash management services and see if you have a need for any of these services, or maybe you'll have a need in the future. The first one is the one that you'll all laugh because it's kind of a joke. It is online banking. And believe me, there was a time when not all banks had online banking. Usually once you used online banking, you were hooked. You could never go without it again. I mean, to be able to just check your phone, to check your balance, to check if checks have cleared. I mean, to check all that 24 hours a day, 7 days a week. It's a really big deal. And you can do it anywhere you have internet. And I think the reason is that years ago, internet was not so prevalent. So, and internet was not as good as it is today. Especially on, it really wasn't on all the phones that first came out. So anyway, it was a harder thing to do. But as you know, I mean, I'm sure all of you probably have online banking already, but you really need to check it. I know some online banking, and maybe all of them, I don't know, but I know mine in particular does not update on weekends. And this is really kind of bad. Because weekends is when you spend a lot of your money and do different things. So anyway, it can be bad. I mean, I am sure there's banks out there that have 24 hours, 7 days a week, even on weekends where they go ahead and update your account. But anyway, not all of them do. So that is something to think about and maybe ask them about, if they do that. But if for some reason you're living in outer Mongolia and you don't have online banking, please get it because it is a great function. Remote deposit. This is another service that originally was reserved for like the large companies. Now anybody with a cell phone can go ahead and do, deposit checks over the internet. Just another reason, I guess, so you don't have to go into the bank. But I hate to say this, I still go to the bank and deposit my checks. I don't get that many checks. Most of it comes in ACH or online. So I really don't get that many checks. But the ones I do, I will actually go into the bank and cash them. I tell you, that's the one thing that I'm going to try to do maybe in the next 3 months or so is to go ahead and start using, to start depositing checks over the internet, to start using remote deposit. So anyway, it is a great thing to use, though. You don't have to drive into the bank. It's your funds are just due. A check is really just it just tells someone how to route it, what the bank, who you bank with, what the amount is, and then it says what your account number is. And then it has your name and your phone number on it, and then you write it in a certain way so everybody can understand what you mean. But really, it's just a piece of paper with some information on it. So there's no reason why you couldn't, send it through the internet and send it to the bank, and they go ahead and just do it. There is no magical thing about a check. The one thing checks did have, though, was they had magnetic ink on on a lot of the routing number, and then a lot of times what they would do is when you took them into the bank, they would go ahead and have them stamped with the amount on magnetic ink. So what would happen is that when they took that check, they'd take a whole bunch of them, I don't know, hundreds of checks, and they send them through a machine, and that machine would read those and would basically read the routing number, know what bank it is, your bank account number, well, it knows what bank it is, but anyway, and then your amount and the check number and everything, and that's how it could just go ahead and put them into your statements. So anyway, the ACH payments and collections. ACH is like one of the quickest ways to really collect funds. It used to be used like it was like a special thing, you know. Somebody said, "Oh, we're gonna have to ACH that out of your account," and you're like, "Oh, okay." You thought it was some magical thing. Basically, they just take it out of your account and put it somewhere else. You know, for companies collecting funds, you know, there is a necessity to be able to collect your funds fast with no mail delays. I mean, ACH is probably one of the fastest ways to send or receive funds. You really don't want to send your funds ACH unless it's going to somebody that you're trying to help. But normally you want to slow down most of your, when you're paying it something, you want to slow down payment. When you're receiving something, you want to speed it up. So when you're getting money, you want to see if you can ACH the money out of their checking account. That would be the fastest way to do it. And then when you're paying, you know, the best way to do it would be to actually write a check and then have your bank, and some of the banks are already set up like this. They have accounts, like they have a sister bank or another branch of their bank, which is in another Fed district. So therefore, it's going to take a couple more days to clear. So basically, you write that check in that account, and that money goes, you know, that check goes to your bank, but then it goes to the other bank. It's in a different Fed district, so it takes a couple more days, and then it comes back. So that's just one way of slowing it down. You know, and that's what you want to try to do. You want to try to slow down your payments, and you want to try to speed up your collections. The other thing, and the absolute fastest, but there is no, you can't reverse it. It's irreversible, but a wire transfer. And a wire transfer really is the fastest way to transfer funds or to pay funds, but wire transfers are irreversible. And that's why, let's say you're doing a real estate deal and you go into the title company. Well, they're basically going to have the bank wire them funds. And the reason why it isn't instantaneous, they just say, oh, just go ahead and wire that $100,000 over. Bingo, it's done. There is many checks and balances. There's a bunch of checks and balances at the bank. I'm sure there's probably several checks and balances at the title company. So when you do a wire transfer, everybody wants to make sure that that is exactly the way you want it to happen. And these are the right amounts. It's to the right account. It's to the right person. They want everything perfect because this basically cannot be just jerked back. I mean, if it's the same bank, they could do it. But if it's a different bank, they can't just wire money into an account and then say, oh, I'm sorry, I'm going to wire it back out. You know, I'm sure there's ways between the banks that you could do that if there was a mistake. But still, it's a risky proposition, you know, if you make a mistake. The other thing is a lockbox. If you have a lot of accounts receivable, let's say, you know, you give people 30 days to pay, maybe you give them 90 days to pay, maybe you give them a discount if they pay within a certain period. But anyway, that's called account receivable. And it's receivables that you're getting, but the money isn't there yet, so it's coming to you. So you keep track of it on your balance sheet as an asset, as a accounts receivable. And you know, a lockbox is for account receivable processing. And this cash management tool is when your account receivable will actually go to a special post office box and be monitored to get those funds in the bank as soon as possible. Now, there's certain banks that monitor that post office box. They actually have people pull the things out of there like 5-6 times a day. So basically what they're doing is they're bringing it in. It's going to a postal box. They're going to monitor that. They're going to pull that out, and then they're going to go ahead and put it in your account. So it's going to get there very, very quickly. All the, you know, a lot quicker than you getting the check, you know, taking it back to the bank and putting it in the account. You know, they'll do it like in one day. They'll do it very quickly and very efficiently. You do have to have a certain number of accounts receivable that are flowing through your business before you could use such an account. So anyway, that's the lockbox for doing accounts receivable. Sometimes a lockbox has gotten a negative connotation because, let's say you're a business, I'm a bank, and you're in trouble and going out of business, and I have a lien on your accounts receivable. So I'm going to put them in a lockbox, and I'm going to call up your people and say, hey, from now on, you're sending these receivables to this lockbox, this account here at the bank. And so that's why it gives a negative connotation, because sometimes in the old days, people, the only reason why they got that is that they basically owed the bank that money, and the bank was just stepping in to collect it and wasn't letting it go to the business. Anyway, some banks have a courier service. A lot of banks have a courier service where they'll basically pick up your daily bank deposits or anything else that goes to the bank and deliver the deposits to the closest bank branch for processing quickly. So basically, if you were very busy, but you did generate a lot of a lot of checks that came in, they would come by, they'd pick up those checks, take them to the nearest branch, have them deposited in your account, so that you could either get interest on them or just have them available. So you got to be kind of big to have that. I don't know what the charge would be on that, but it's not a free service. I've seen a few banks in industrial parks that'll have it looks almost like a mailbox, but it's basically for the bank, and they'll pick up on those several times a day also. There are sweep options for your accounts at the bank, and when you're talking about sweeps, they're talking about sweeping money in or out of the account into another account. So we're talking investment sweeps, or when the bank sweeps excess funds or a daily cash position into the bank's overnight repo service, an overnight account that gets interest. And then, so you can earn interest on those funds overnight. And then they can either leave them in there or they can take them out. So if you have it to hold a certain amount, they can either put it in, take it out. Maybe your account has to be a certain level before you take money out or put money back, but they can automatically do that, and it's pretty seamless. For a large company, that works out pretty well. There also is a line of credit sweep, and basically what happens is excess funds are automatically swept in and out of your line of credit, and so this is so you pay less interest on your line of credit. So usually interest on some lines of credit is like a daily interest amount. So they'll basically, pull money out when you have extra money and put it in your line of credit. And then when you need money, when you write checks, then they pull it back out. I've seen some of these where it's just a line of credit. So the person basically, when they get funds, it goes into the line of credit to pay it down. And when they write checks, the bank pulls it out of the line of credit. So those can be done a number of ways, but it's really depends on your bank and really what they're willing to do. There is another type of account called a zero balance account, and the zero balance account just really ensures timely disbursement funding of an effective use of working capital while providing separate record keeping. A zero balance account is usually used for dispersing payroll, merchant processing, or controlled accounts. The biggest thing that's absolutely paramount in this account is record keeping functions. The zero balance account has a certain amount in it, let's say for that payroll, and that's it. You don't have over amounts of money, so it just pays out that and it records it very well. So anyway, and a lot of these you want to check with your bank. If you can't avail yourself, if you're not big enough, they will tell you. They will tell you what it costs. A lot of times they'll try to sell you services you really don't need, but you really have to look at the cost and whether this service is really going to help your business. There are other cash management tools, but these are a lot of the main ones available at most banks. Your bank can tell you what can help you save money and what tools they have available. Some banks, larger banks, have a special cash management group, cash management division, where to have people that just do that. So anyway, thank you very much. I appreciate you sticking around this long. If you would, it'd be great if you'd subscribe to the account And if you hit the bell notification, you will get future videos, notification of when future videos are. And if you found anything good about the video, if you liked anything, I hope you hit the like button too. So anyway, this is Roger Schlueter, and I will see you in the next video.